Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US stock markets finished higher last week, boosted by the Fed's 50 basis point rate cut. On Friday night, Fed Governor Waller said he supported the Fed's larger cut and is open to another 50 basis point cut if the labour market worsens or inflation drops further. Despite the recent rate cut diminishing the immediate impact of new data, the focus will be on this week's flash PMI and core PCE figures to assess recession risks. Historically, when the Fed has cut rates and a recession has been avoided, the S&P 500 has rallied an average of 17% over the following 12 months. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as we start the new week. All right, this is our uptrend coming from back around the end of 2022, which picked up this low to a degree back in August. And then the continuation of this correction has resulted in the Nasdaq pushing above this downtrend resistance coming in from this high back on the 10th of July at 20,690. So positive signs here for the Nasdaq breaking above this trendline resistance. However, we still need to see it get above resistance, let's say at 20,000, to really give us a stronger indication that this whole corrective sideways price action is complete, potentially down at this low here, and that the uptrend has resumed. So if we were to fail to get above 20,000, maybe start to see some rejection from above this level, and it falls back into this range, then we have to be open to the idea of another leg lower, potentially down towards this uptrend support coming in around 17,800-ish. Conversely, above 20,000 and an ability to hold above there, then that puts this 20,690 level on the market's radar, with scope then to push up towards 21,500-ish, up around this level here. Now, turning to the S&P 500, it's already at fresh record highs, closed there on Friday night after breaking above this horizontal resistance here coming from the July high, and it also picked up a high here in late August. What we know with the S&P 500 is that while it holds above 5650-ish, things look pretty positive. We could start to see another leg higher, or we should start to see another leg higher up towards 5800. That would be on the provisor that it holds above 5600-ish and certainly goes no lower than 5600-ish, which is this support region here. If it were to break below here, then we would need to be open to another leg lower, initially down towards 5,400. The 200-day moving average sitting around 5,200. So these are the levels to keep in mind for this week. S&P at fresh record highs, the Nasdaq eyeing fresh record highs. Things look pretty positive. Inflation should be pretty good this week. We have seen a large 50 basis point rate cut with potentially more to come. And of course, growth, as we look at the Fed Atlanta GDP now numbers, they're suggesting we're going to see Q3 growth of 2.9%. So all we're seeing is lining up pretty positively for US equity markets. Thank you for listening and have a good week ahead.